Good morning, trading world. It is July 12th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. As you know, I haven't been in front of the screens a lot this summer, all with good reason. I am close to wrapping up the first guide in a series about trading day types. So stay tuned for that to be out pretty soon. The title for today's outlook is Danger, Danger, Possible Riptide Alert. Be careful. Now, in keeping up with the theme from the last pre-market I did of being in the midst of a tide change, we all need to be especially careful Wednesday, Thursday, going into Friday morning. On the surface, everything looks good and the waves are calm, but under the surface, something crazy is brewing. We are approaching a situation where all intraday charts plus the longer term charts could be in an overbought territory together in sync. I am especially worried about a possible head fake on the daily chart. And let me show you that real quick. In looking at the daily chart, and we come down to the MACD, if you notice the bright red bars on the histogram mean gaining momentum, in which we were gaining momentum to the downside, but the darker red means that we're no longer gaining momentum. So this could mean we could get a pullback where these two lines possibly meet, the same thing we did back here, where it looks like we're going to go back up to positive momentum, but it could turn into a head fake where we get that waterfall down, or that next further red histogram bar where we gain momentum to the downside. Now, with the momentum synced for all time frames, we could have an outsized day to the upside today. But the moment we lose that momentum, we could have a larger surge going the other way. I mean, down in a hurry. Trading is both reactive and proactive. This is one of those times where if you took some long call positions like me, you want to be proactive in holding on to your profits. I'm not saying that the ride up is over, but on each wave you have to understand ebb and flow. The ebb is when tide is receding back out to sea, and the flow is when tide is rushing up onto the beach. My thoughts are that there's a chance between today, Thursday, and Friday morning that we could have an ebb so large it could knock the juice out of my call options, meaning profits. Now, with the thought of that happening, I'm going to be proactive today by rolling up a couple of the call options to lock in profits, but still have some exposure to possible higher upside. I'm calling this a riptide because on the surface you can't really tell what is going on, but you don't want to be caught in the riptide and churned until you drown, or in this case, lose your profits. Now, things may not play out this way. We could keep going up to 450 and beyond with a small pullback. But I want to be proactive, because if it does happen, it could be very sudden, an overnight or early morning trade. What I will be watching is the 4-hour time frame for any fade in momentum and strength. And just to show you what that 4-hour looks like, we have still good momentum on the 4-hour MACD. So I'm looking for any type of tide change here where we start to roll back over. So that's especially important to me right now. So as you can see on the strength meter, the RSI, we are very close to the overbought levels. And going back to the daily, this is the case as well on the daily. This is also the case on the weekly. Not quite there yet, but we're getting there. The monthly, we haven't made it back to the overbought area. And this is kind of the reason why I don't see the upside completely going away yet, because there's still some room to go on the monthly. Now, the key thing here to watch, we did flatten out here. So this could mean that it's likely this could be it for the monthly, giving way to the weekly and daily, because they are near their overbought areas. Now, something else I want to take a look at, in looking at the top 5 stocks right now driving the S&P, we have some turnover, but tech is still key to watch. The top 5 have been taken over by financials. Number 1 is Citigroup. Number 2 is Wells Fargo. Number 3 is Tesla. Number 4 is United Health Group. And number 5 is AMD. Now, all of these, as of 7:30 a.m., were set to open positive. And looking down the line at the larger market cap companies like Nvidia, Amazon, Microsoft, Alphabet, and Apple, they are all set up to help push the market up as well. From here, let's go take a look at the key levels of the day. Alright, here we are back with our key levels of the day. Starting on the resistance side, we have our jack resistance at the 443 area, which we've gone well past overnight. Then we have our queen resistance, which is going to be the 444 to the 445 area. And then our king resistance, which is going to be the 446 to the 448 area. On the support side, we have our jack support at the 442 area. Then we have our queen support at the 441 to the 440 area. And then our king support is going to be the 439 all the way down to the 438 area. I know some of you are probably asking questions or wondering what the red lines are in the background. Since I haven't been in front of the charts as I normally would be to watch things, I kind of drew a channel in place when I entered some long positions to kind of keep track of where I want to get out of. If it drops back down below the lower, well, outside of the upper third of the channel, that's kind of a sign for me to get ready to exit. So that's what it is. It's just a channel with thirds drawn into it of where I like to stay involved in kind of marking, jumping back out of this. This is kind of the middle third is kind of no man's land. I don't want to do anything in that area. But if we do drop back in, it's a sign to exit. Moving back to our key levels. The main thesis for today is bearish, closing below the 442.46 with a projected target low of between 442 and 438. The alternate thesis is bullish, closing above the 442.46 with a projected target high of between 443 and 448. The main channel we are in is between 425 and 453. Now remember, outsized days happen when everyone is caught on one side of the boat or resistance area, and we get a break of that resistance, causing everyone to run to the other side of the boat, suddenly causing the boat to capsize. And this is when sellers suddenly changing, the sudden changing of sellers to buyers to close positions, and then piled on by the fear of missing outers, buying just because. All of that pushes us to that break. So you want to be very careful today, because we're on the edge of that break, and everybody could suddenly rush to one side and the boat could be turned over, and we could have a very large outsized move today. Now, yesterday, market strength and breadth opened in the upper part of the range and held the same range pretty much all day. I expect strength to open strong and either get stronger or hold strength throughout the day. Now, we do have dissonance between the technical side, which is bullish, and the quant side, which is bearish. Looking at the futures, we have a bearish bias for the day with harmony between the technical side, which is bearish, and the quant side, which is bearish. That alone kind of creeps into my mind, makes me think that we could actually have what's called a rounded reversal at some point today. So I'm going to be keeping an eye on strength and watching it. You can also watch for it on your indicators, and it's basically a play on divergence, where with price moving higher, you'll see your indicator or your strength meters moving lower. And on a day like this, where there could be such a powerful break of resistance, it'll take it quite some time to actually catch up and happen. So we could be moving all morning where strength is moving higher, well, price is moving higher, and strength is just kind of waning or moving lower, and it may not show or happen in price until halfway through the day or even in the coming days. So that's what I want to be really, really careful of as well. And that's why, regardless of what happens today, at the height of today or when strength is the strongest, I'm going to be looking for exits or rolling exits so that I can at least lock in a lot of the profits on some of my call options today. Now, with that being said, let's get to the projections. All right, our most probable day type today is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area. Find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. So this is our rounded reversal day type structure. All right, our next day type projection is going to be our trend day up. It's pretty possible to have a pretty powerful trend day up today, where we open gap up, start with a push back toward the previous close, but find support on or before, primarily way before we get back to the previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance area. A key to watch today is for a big risk of a failed trend day where we push down from a target. And give me just a moment while I look up what I have for the target. And that target could be anywhere between the 446 and 450 area. I would show you a neat trick, but I can't do it in the drawing mode right now because it's something on the chart. But a good way when you have a designated channel drawn, because things, believe it or not, price is pretty symmetric. But since I have this price channel drawn, and if we break above the higher end of the price channel, I would just duplicate the price channel and set it on top of this price channel, and that would give me the next range to look for, and so on. So it's kind of a neat little trick to do when price breaks out. So that was our trend day up. And let me bring up the last one. All right, last but not least, we have our expanded range day structure. We could get a pop pre-market or early in the session into rejection from resistance, experience some consolidation as we try to get it together for another push up, but never really grabbing hold. So those are the scenarios for today. As I often like to say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk in the positions that we have, and also the risk in the current market conditions. We manage that risk in accordance to our account size. So again, I hope this helps. Wishing you a positive trading day as always. Let's go out and make it a great one, and try not to get caught up in the riptide.